following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 28th Turnaround Tuesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes. As you can tell, the throat still not back up to 100%, but much better than yesterday, that's for sure. Of course, you know, it's always great to be with you, but man, it was tough to power through yesterday. Just like the markets were struggling to power to stay down. Today, they're to the upside. Dow's up 150 points right now. S&P is up 21 points. I'm absolutely grateful for your presence here today, and I am here to serve you. So feel free to pick up that phone. Dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Of course, if you were listening in yesterday, I gave you the parameters with regard to the market, and I said that there was a 90% probability, if the market continued moving down like it did, the VIX did what it did, that you would see a bouncer bottom. Voila. We're looking at it right now. You've got the Dow up 150, 90%. That's a pretty decent probability. That's a pretty good warning signal for those of you that were short as to what to anticipate, as well as those that maybe you wanted to go long out here. So we're going to go take a look at the markets. The bulls are absolutely not out of the woods just yet. We'll go take a look at different resistance levels out here. But and I gave clients at least by 7 o'clock this morning, at least 6 or 7 charts that said that bounce or bottom was in. So we'll go take a look at the markets out here. You've got gold trading back $2 right now. Silver's flat. Light sweet crude is up 66 cents out here. A number of stocks moving to the upside. MicroStrategy, that's up $26. Priceline's up $25. Regenerate Pharmaceuticals up 16. Precision Cast Parts up about $10. Tesla's up 10. Baidu's up 34 points. That's down 17% out there. Amazon is off $7. We'll go through as much as we can out here, but let's begin with where we're at and what patterns are out here. You know, you gotta love pattern recognition. You gotta love the tools. And I recognize before the show came on, I've got CNBC in the background, and Tom DeMark was doing a spiel on in a nice way, and I mean that in a positive sense, giving his take. That which I heard, I didn't hear the entire thing, but that which I heard, he was giving his take on the Shanghai. And he was explaining, he was trying to correlate different significant corrections inside the market. 2000, he went back to 1987. I don't recall if he went back to 1928 or not. But in the process of what he was doing was he was describing how the markets were making 0.618, 62% retracements out there. And it was the second time that he was into it, because he was giving specific numbers with regard to top to bottom, and then just simply giving the 62% retracement. And the commentator, bless his heart, he just stopped and he said, that's just too many numbers for our listeners to be able to, in essence, he didn't say exactly like this, but too many numbers for their listeners to wrap their head around. And what it did was, actually, it made me appreciate the fact that with regard to technical analysis, you know, it is absolutely the most fundamental aspect of being able to take a look at what a stock is doing, a currency, a commodity. It doesn't matter what time frame, whatever it is that you're doing. And they're great gauges to help us understand where prices headed to. They are like taking a can you imagine, you know, needing to be able to give somebody some dimensions of building something for you, and not being able to use some kind of ruler, some type of measure of being able to measure distance. You know, that's really all that we're doing out here. Now, the cool thing is unlike a ruler where you've got, you know, so many different numbers of distances between 2 points, the cool thing about Fibonacci retracement is there's really only 3 numbers that you need to focus on from a retracement standpoint. You can add a fourth one in there, but really only three numbers that you need to focus in on. And with regard to expansions, really only two numbers. There can't be more. But if you just focused in on five numbers, it's really not that hard. Now, and with regard to being able to identify swing points, it's also not that hard. And what's so cool about utilizing that technique, we'll take a look at it here right now as we look at the 120-minute chart for the S&P futures out here. If we take a look at just simply Fibonacci retracements, if we go from low to high, that's really all that Tom DeMark was doing. That's all I do. That's all Larry does. Anybody that's using Fibonacci, we're either going from highs to lows or lows to high. In this case here, we're just simply starting off with regard to what has the ES Mini done thus far. And if we take a look at the low out here that came in at about at the open on a Sunday evening, July the 5th out here, if you go from that low to the high, that little key reversal session out here at 21.26, what we can see is the market typically utilizes these Fibonacci retracement levels as like elevators, like getting on an elevator and punching a button. The first button that you're going to punch out here is 0.382. And take a look at what the ES Mini did. Off of the high, it came all the way down and it stopped really right at the 0.382 retracement. The actual low that it hit back at about 2 o'clock in the afternoon, between 2 and 4 in the afternoon on July 23rd, was 2,091.50. Now, at 2,091, and it basically even, Stephen, it says 11 cents. But it only trades in quarters, so it's either 2,091 or 2,091 and a quarter. But that's it right to the T. Take a look at price, gets down there, it rests for several hours, makes a little bit of a bounce, and then does what? It moves down to the next level, 0.618 retracement. Now, the 0.618 retracement, all that Tom DeMark was really doing, and for those of you that caught that segment out there, all that he was really doing was, and I'll go back to the chart out here for you, and we'll come back to this, but this way we can tie everything together. But I do appreciate how technical it may sound to you when we utilize these types of numbers out here. And all that we really need to do is just simply go ahead and maybe add a little bit more clarity to it for you. And now I'm going to put a monthly chart up on my screen here. And he was giving a forecast, I think it was 3,200, something like that. We'll see when it pops up. Yeah, 3,267 actually to be exact. And if we take a look at the monthly chart now, going from low to high, in this case here, it's the 2013 low inside the Shanghai, all the way up to its high that took place last month up at the 54.23 level. And if you just simply go from that low to that high, and you just use the same numbers, 0.382, 618, 786, by the way, that's the third number that you're going to want to focus on and pay attention to, is it shows that you're already below one floor. That's a 0.382 retracement inside the Shanghai. It says that at some point in time, it's likely to get down to 32.67. That was his initial forecast as to where things would go. And if it fails there, meaning if price if it keeps coming down, it's coming down with volume, wide-ranging bars, different things that you and I take a look at, that says it'll go down to the next level, 26.81. Really no different than what took place on that 120-minute time frame chart here for the ES Mini. Price gets right down to the 0.618 area, 2,069, bounces for a bit, just like we had basically this very small rally back here, right, off of the 0.382, small rally. You can take a look. Let me just go ahead and I'll color in that. Well, I won't color it in, but I'll put a little box around it, right? Here's the, whoops, I'm going to try to put a box around it. Let's see if my system, there's your box, there's your rally. And quite frankly, if we take a look at that little rally out here, it's even less of a rally once we got to the 0.618 area. Price does what? Moves down to the 0.786. Now, what you'll notice here is the rally that we've had off of the lows from yesterday, well exceeding either of these two, really three rallies that we've seen on the way down. Does that mean something? Yeah, of course it does. It means that this is a rally to be paying attention to. This is not one of those, hey, this is a rally that's going to be sold off. At least that's not the message just yet. So that's really all that he was trying to explain. That's all that I do, or Larry, or as I say, anyone that takes a look at these Fibonacci numbers on a consistent and ongoing basis. So now what do we have out here? I'm going to go ahead and delete this. Well, the next thing that you and I want to take a look, actually, let's take a look at the Fibonacci numbers from now, the top to the bottom that's in here. Let's get a feel for where price is now likely to head to. Same thing, just we're now reversing it. So we're going from the high down to the low that was put out here yesterday or early this morning out here, right around the 2056.50 level. What we can see is price has now hit that 0.382 retracement level. That's the first level. This is where the market ought to, doesn't have to, but it ought to begin to peter out. If it doesn't, and I apologize to every Peter out there, I'm not even sure where that came out to, but it ought to start to get tired. Now, it's moving into this level here with a wide-ranging bar. But that wide-ranging bar, we'll see if it keeps up with this, and it slices through this like this price point, 2,083, like Kerrygold butter with a nice little hot knife. Then price is going to head up to 2,099. Look, we just took a look at what it did from low to high and on the way down. Now all we're doing is just really reversing that and saying, hey, this should be a place for a resting spot, mark it off. And then it'll be the determination will be, hey, what kind of retracement takes place? Is it a small one like we saw here, get a 120-minute time frame chart that we are taking a look at as it did on the way down? Or is this it? Because it could be it. It absolutely could be it. This could be all that she wrote, a 0.382 retracement. Setting up a large A to B equals CD to the downside out here. So it's another tool that you and I can use. You know, one of the things that you and I can use is we can take a look at our trend channels out here. And I think when we look at the 120-minute time frame chart for the S&P futures, this is a pretty good channel line out here for resistance. So you can see that it wouldn't be unusual for price over the course of the next 3 hours out here to try to punch up and get above this 0.382 retracement level and run, boom, right smack dab into the top of that channel line. Here's the key, and that's what I would expect. It'll run into it. It will stall there if it doesn't stall right here. I mean, that's the next stall area out there, and you know, maybe it just simply if it stalls and there's not much of a pullback, we're a good handoff to Asia. Asia rallies, Europe rallies. We come back tomorrow morning, and of course the futures market is open all night. Then that gives some momentum to move up to the next level, and that's that 2,099 area inside of the ES mini. So that, and if we take a look at other areas of possible resistance, you know, here's my TAS market profiles out here at 2,085. That happens to be the bottom of the daily box out there. So that's resistance. That old resistance level should have held as support. Sometimes, many times, old support, once you break through, it becomes resistance. So what this tells both you and I, this is a beautiful way to put together a great set of tools that we use here at TFNN. So I'm using tools that from Leonardo Fibonacci, that's the long-lost cousin of Larry Pesavento. We're using some of John Logan's tools, the TAS market profiles out there. Channel lines, you know, who's the father of channel lines out there? Let's go with Bud Rolfs as one of the fathers of channel lines out here. And we've got really a convergence of these three price point areas, 285, 2085, 2083, really all converging in one spot. So you can see that ought to be significant resistance. So for you and I, as both bulls and bears, and as not bulls and bears, just simply as technicians, market technicians, we know that's a significant area of resistance. If price breaks through there, where's it going, my friend? 2,099.75. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, the cool thing is what we just went through during that last segment, not a single element that we went through during that last segment was any part of the 6 or 7 charts that we used to call a bottom this morning at 7 a.m. inside of the stock market, inside the newsletter. So come on over to the homepage, and I teach everybody how to do this. So you don't have to be a subscriber for life. It's not like I keep everything a secret. I share with you a different way to look at a different way to take a look at a chart out there. And a set of tools that work really consistently. So it's actually very cool to be able to just simply drown out all the noise, and whether the markets are moving higher, all the euphoria, and as the markets are moving lower, all the sadness that's out there, and instead just trade the patterns that are out inside of the market. One thing we didn't do yesterday, we didn't get around to taking a look at the ETF structures, the index ETF structures. So why don't we go ahead and do that? Let's go start in and take a look at the QQQ ETF series. Actually, before we do that, let's go check in on the NDX 100. Well, let's do it on the same chart. Make it a little bit easier. Make it a little easier for Stevie, I think. Now, the NDX 100 is the one indice that created the island reversal out here. And I want to, didn't mean to do that. I want to see if it has closed that gap here. Looks like it has. The low of July 24th was 45.52.40. And the high so far today, 45.57. Yeah. So that island no longer exists out here. So that is not a valid pattern inside the NDX 100. That was absolutely worrisome. It was worrisome to me that that pattern would remain and stay valid out there, because that carries with it, some fairly bearish tendencies out here. Well, you always have to keep things in perspective, because remember, like we talked about yesterday, it's all about being able to identify where price is going to fall to when you get a bearish pattern out there, and it's going to fall down to a level of support. In this case here, inside the NDX 100, that would have been the 43.49 level. It's not that it couldn't take that area out and break through it, but it's just that that's the next level where price could pull back to. Now, we have the island reversal is gone. You don't have to worry about that. That doesn't mean that things can't fall apart here. It just means that that pattern is no longer valid. We can take it off our list. It's not something to deal with. We did have price break out of a consolidation between 43.49 and 45.62, and it failed, so it was a breakout failure, that's for sure. And until price gets back above 45.62, price is subject to come all the way back down to test the lows out there of 43.49 out there. Let's go now and take a look at what it means for the Qs, because we didn't have inside the QQQ series ETF, we most certainly did not have the same island reversal pattern out there. Slight difference between what the Qs are going to show in price because of fees, because of dividends out there versus the actual indice. Now what we've got, you can still see we've got that consolidation, that failed breakout pattern between 105.82 and 111.16. Any move above 111.16, the next area of resistance becomes 112.06. That's courtesy of our TAS market profile partners out here. That's the bottom of the box. That's the daily bottom of the box. That should be resistance. You get above that, folks, and what that says is we ought to revisit the highs. The Qs ought to go and revisit the highs out here. And in fact, the Qs can go ahead and even make an A to B equals C to the upside. Volume today, not too shabby. It's 130. It's 22 million shares. Hey, yesterday was only a pullback with 35 million shares. It wasn't exactly as if everybody was, selling everything that was in sight out here, because that was not the case, certainly from a volume perspective. You can see today you've got a hammer candle right now as we speak, but it could look a whole lot different come 4 p.m. That's, we've seen a number of hammer candles here. The last one inside of the QQQ series was July the 7th. Excellent candle to let you know that the market was trying to find a bottom. We come up with a hammer candle today, the market was finding a bottom, and I'd have to go with one of the things that you could take a look at inside the QQQ series is just go take a look at retracement levels. So if we want to understand where price is likely to head to, first level is 111.54, second level is 112.63. At 112.63 at your 0.618 retracement, that probably is where things start to get a bit more dicey than they are here on Turnaround Tuesday. So that's what's going on inside the QQQ series ETF. The IWM, if we go take a look at it, the IWM completing the 1-to-1 A to B equals CD to the downside, basically completing it. The price projection was 118.93. The low here looks like the low was, give me a moment, was 119.34. So what was it, off by 41 cents out there on a $118 instrument? And you do have a hammer candle. That's called buying the D point. That's how you would buy the D point of any A to B equals CD. That would be textbook. Of course, you need follow through tomorrow in order for that to occur as well. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You know, while we were at that break during that last segment, if just like a conductor of an orchestra, only take a look at the ES mini chart, the 120-minute time frame, priced it exactly what it was supposed to do, went up, hit the resistance level in that 2085 area, and then these descending trend, prices backed off a bit, as it should. And so now it's really going to be a measure of, you know, how does that retracement look? We've got about 25 minutes left in today's show out here, so we'll go and take a look at short-term charts during the show just to try to get a feel for, you know, if you're an intraday trader and you took the long trade, you know, now is a good time to really tighten up your stop out there. Let's go out to Newport Beach to Garo. Garo, thanks for calling. Thanks for holding. How are you this afternoon?
Thank you very much, sir. How about you?
I'm doing very well. And you want to go grab a burger at Shake Shack?
Yeah. No, we don't have Shack in California. I don't eat meat. I'm vegetarian. I don't eat no animal food. But here there's something that I looked at it. I'm looking this chart for very many time. First of all, on 31st of July is the last day of whoever bought IPO at the very beginning. They can they will be able to sell it. Until now, they won't be able to sell whatever they bought it at the very beginning in February.
Okay.
I could never ever shorted this stock because it's very hard to borrow at Schwab. So
Yeah.
I'm just looking at it. Now on 31st, this is gonna people are gonna sell whoever they bought it for our IPO. So it will now from that date the shares will be available to short.
Yeah.
So. What I'm thinking that considering that the earning was very bad in January, February, March, April, May of 13th was $1.06. And even though today, if you look at the monthly chart, daily monthly chart, you'll see that on a SAR parabolic is the first dot that it hit the top. If this stock comes down at $48.21, I want to short it all the way down to $40. What is your idea?
Well, I think with regard to Shake Shack and Garo, no, I'd be surprised if they don't have a vegetarian burger for you there. I've never been in a Shake Shack. Of course, if you don't have them in California, you don't have to worry about it. But
Yeah, no. No.
But those vegetarian burgers are not too shabby.
No, they're good. No, I'm not a burger guy. I'm not a hamburger guy. I eat all I eat is rice and beans and the steamed vegetables. That's my food. Yeah, I don't go.
Well,
to
that makes sense. That makes sense with you getting up at 4 in the morning to go jog for an hour. That would make sense. You know, to answer your question, as far as shorting it down to 40, you're going to have a good benchmark, which is going to be the July 16th, the swing point at the moment. And as long as it can close below 48.21 with more than 381,000 shares out there, then that says that, sure, Shake Shack can get all the way back into, you know, so far the low inside of Shake Shack has been 38.63. That's the February 17th area. So
Yes.
from a technical standpoint, that's really all you and I have to go on. It's not a lot of data, you know, going back to February of this year. But
Yes.
we'll use the data that we do have. So I would say that the key for you is that now where there could be some decent support inside this equity, I would say focus in on March 12th, because March 12th was the first time you saw a sign of strength out there. And that
Yes.
low is 42.08 and the high is 49.60. So that's also going to be another benchmark area for you to be looking at. And that had 2.8 million shares. So that's a pretty decent volume day. 42.08 is above your target of $40, but that could be where it finds some decent support. That's what it looks like so far in Shake Shack. Otherwise, I would say, you know, you're probably better off looking at intraday charts. 10-minute, 30-minute, 120-minute,
Yes.
something like that,
Yes.
to probably get a gauge as to what buyers and sellers are doing.
Absolutely. If when I go long or short, I check on 15-minute and on 30-minute. On
Yeah.
these two, I'm very, very conservative. I don't even consider 5-minute or 10-minute. Mine is 15 or 30. Both of them have to mimic each other. When like today, like UCO, they mimicked each other at 15 and 20, and I bought 1,000 shares and I sold it. But this one, if I go from 48 to 44. On 1,000 shares,
Sure.
that will be enough. I'm not going to wait until 40 or 42. I will get, if that works the way that I'm looking at, considering that the first dot has been hit at the top, so and it's far away from today's candle. So to me, it's indication that this is going to go pretty low.
It certainly can. It's got to take out that, you know, on the way down. So Shake Shack, folks, traded up to as high on May 22nd, $96.70, and it's trading right now in the $50 range. And if you take a look at that, Carl, the first time that it backed off all the way into this $47 area. It's found support, and I would say it likely found support because of those funds that were buying in around that March 12th timeframe out there. So that's your battle. Your battle's going to be against that group. And if it can get below the low of that at the 4208 area, then you're going to have another couple bucks, probably, maybe even $4 to get down and test that its all-time lows thus far. All right, my friend?
Very good. Very good. Thank you, sir. Thanks so much.
Bet.
Thank you.
Thanks for calling. That was Garo in Newport Beach, California. I also am not, can't recall the last time that I drove into a burger place, like a Shake Shack. What's the other one? The other BurgerFi. That's another big chain, although that's not I don't think that's a public company. Maybe it is out there. BurgerFi, though, actually I have had a vegetarian burger from them. In any event, the Dow's up 170, S&P is up 23. Let's go check in on a few things here. Let's go see what's going on inside our summation index for our New York Stock Exchange, for the NASDAQ composite out here. Looks like the NASDAQ composite. The body of that candle at this stage here, probably too large to be a hammer candle. Yeah, I don't think that's a hammer out there. But if we take a look at, the NASDAQ composite's actually giving you a pretty decent signal that there's more to this bounce than just what we're seeing today. And the reason I say that is because it broke this little trend line. Now, the real confirmation will be for it to get above that zero line. I don't have off the top of my head the net advancing issues that it needs. It was probably like the New York Stock Exchange. It was around 3,000, something like that. So it's not going to happen today. But it's turnaround Tuesday. It's a decent start. Price inside the NASDAQ composite likely headed to 5104. Dead cat bounce, 0.382 retracement level. At the same time that it's doing that, if you can get above that, get above the zero line in its price oscillator, it makes it run back towards its highs out there, maybe even makes new highs. It's always a possibility. It could always, if it gets some volume to the upside, okay, now you're talking about an A to B equals CD to the upside. But you got to take things one step at a time. As we speak right now, there was that 90% chance of the market forming a bottom or a bounce. It is uncertain at this stage of the game which of those two it was. Both of those were going to lead to the market, to a market rally. And, this was something that I communicated to you guys 24 hours ago as the markets were moving lower out there. So, so I guess the point that I'm making there, if I had the tool set and the wisdom to be able to, with conviction, say that to you. I don't give this stuff to you just for the heck of it. That's not how I operate out there. And what I'm saying is I don't have that same conviction with regard to what the market wants to do next. Where we get that conviction, that's pretty easy. That conviction, I believe, comes from breaking through that descending price channel out there. So that's where, and we haven't done that yet. Price has just gotten up there. It's tested it. Maybe that's it for the day. It's been a good day thus far. Things move sideways out here. I don't know that we've gotten the short covering rally just yet, the sphincter muscle. In fact, we shouldn't have any kind of short covering rally just yet, because this is the stage right here at this 2085 where those that want to get short the market, this is where you'd be firing away. You'd be firing away all of your weaponry at this stage of the game, because this is resistance. And so that's where I'll have more conviction when we see a breakout of this area. Of course, that conviction takes us to that next level, 2,099 out there. Another area that we'll be paying attention to certainly is the volatility index. Now, the volatility index today, it is back in line for the bulls. We have the volatility index. It is below the 50-day exponential moving average, which was 1427. You're at 1357 right now. What's the percentage move off of yesterday? You're down 13%. You have a day like yesterday. If things end up like this, actually, then my conviction starts to move back towards initiation of a move off of the bottom. When you have days like yesterday and today come together, more often than not, today is an initiation move. Screw some of the other stuff, the market breadth and the volume. Go back and it's more than just two. If it were only just two things for us to take a look at to be able to identify what a chart was going to do, imagine how easy it would be for everyone. It's just not how the market operates out here. So the volatility index being back below 1427, what it does is it really puts possession of the markets from a liquidity gauge standpoint back in possession of the bulls. The market does only two things when price is below the 50-day exponential moving average, no matter at what price, no matter at what time. And then what I mean by time, you can go back to 2008 and you can put the 50-day, and it was priced at $50. And once price was below the 50-day exponential moving average, the market did only one of two things. It went higher or sideways out there. So 1427 is a key level out here, and that is back in possession of the bulls out there. We go take a look at some things that are moving in the market out here. Let's go take a look at a couple of these. Let's go take a look at Baidu to the downside. Now, getting hammered, some of this you would have to anticipate is certainly China related. Big gap to the downside, big volume to the downside, 20 million shares out here. Give me a moment. Let me remove a couple of different studies off of this chart out here. Let's go ahead and let's move this out here. Let's go ahead and put the 200. See if the 200-day, that's below the 200-day exponential moving average out there. We know that it's pretty much below everything. So where is this headed to? We're going to put this on a weekly chart. I think that's probably the best thing to do in taking a look at Baidu. Let's go find out if there's any support or high volume low or where this thing might be headed to. So as we take a look at it, and that would be the 200-week exponential moving average that shows up on our screen here right now, which is different than a 200-day. If we just take a look at retracement just to get a feel for what's happened, is looks to me like Baidu ought to get down to about the 147.54 area. That's its 0.618 retracement area. Right now trading at about 163.21. That's your big mover to the downside today, dollar-wise and pretty much percentage-wise as well. Now to the upside out here, we've got Monster Strategy, or Micro Strategy, not Monster Strategy, but Micro Strategy. MSTR, that's why I came up with the monster. And on a weekly basis, this is breaking above a swing point that had weekly volume of 938,000. You've done 553 for the week. It's only Tuesday. So this thing has broken out to new levels. This is at all-time highs out here. Can we get a feel for where price is headed to? Here's where you and I can use expansions of swing points. So we talked about using retracements of swing points and focusing on three primary numbers. Sometimes people will call me or they'll send me an email and say, how come you don't use the 0.50? You don't use the 0.23? I just don't use those. I see markets that tend to hit the 382618 and the 786 numbers more often than any of the others. Plus, I got enough stuff on my screen out here. I don't need to add more numbers than we already have. But here's the expansions. Expansions that you're going to take a look at are 1.272 and 1.618. So here's a perfect example of an expansion. You're taking two swing points out here where you see a change in trend. The swing point is nothing more than in this case here, take a look at the market is driving down the road and you're looking for major intersections where you see price actually change direction out here. And that would be between the levels here from the trading week of July 18th, 2011 and the trading week of June 17th, 2013. And if you take from that distance between those two, which is $94.70, and you multiply it times 1.272, what that's going to do is that's going to take you up to a price point objective of 204.34. You know where it's trading right now, folks? I didn't set this up, 204.33. Now, some people might say, boom, voila, we ought to go sell that puppy out here. I would say hold your horses. This thing just moved into the 1.2. Wait to see what Friday looks like out here, but it just moved into the 1.272 expansion with its widest ranging bar since the week of April in 2014 out here. Off of numbers, but more likely than not, MicroStrategy headed to 237.10, the 1.618 expansion, the other number you want to keep in your right pocket. This is Steve Rhodes for TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metals CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow up 178, S&P up 24 points. We mentioned IWM earlier in the show. We mentioned that it had completed a 1-to-1 A to B equals CD to the downside. Nice hammer candle as we speak right now. More so than that, you've got a key reversal session as well. So you got 2 nice little reversals after completing a pattern out here. Now, yesterday's move down inside of the IWM. And this is the IWM in the Dow are the 2 weakest of the indices out here. The IWM, I didn't even include this as one of the reasons that the market was forming a bottom, was it was pushing lower with light volume. 35 million shares was taking out a swing with 40 million shares. I don't think so. Today, off of the bottom, one could argue, hey, it was pushing lower earlier. I'm going to say no, that's not the case. You've got 36 million shares off of the bottom out here. So you've got some pretty decent volume. You're going into 39 million from July 24th. So it's moving up pretty. Now, expectations as to where the IWM could trade to off of this A to B equals CD pattern. Again, just go back to our simple retracements to come up with our first set of numbers. 123.06 is absolutely not out of the question, nor is 125.37. So those would be two numbers to take a look at. If you look at market profiles, you got 123.60. That's your daily bottom out there. That's old support, maybe new resistance. So your first target inside IWM on a bounce, 123.06 to 123.60. You get above that, and then you're looking at 125.66, 125.37 as its target line of where price should head to. If we take a look at the SPY out here, that's up $2.30. That's got 75 million shares traded thus far. Yesterday down with 132 million shares. It's made the 0.786 retracement yesterday. Volume is nothing special here. It is summertime. It's going into 117 million shares on July 24th. So it's not ugly. That's for sure. Now, where could this head to? You got a couple different potential patterns out here. But if we just look at retracements, just simply, that's how we began the show. Let's go ahead and end the show the same way. You can see it's already come up through the 0.382 retracement level, which was 208.90. That says 210.54. And the reality is inside of the SPY out here, the SPY is going to go ahead and respond based on what goes on inside that ES mini chart out there. So that's at 282.085, and I did say we'd go back and take a look at shorter term charts out there, and I didn't do that. So again, just to try to finish this up here in 1 hour's time, you can see now this is just a 5-minute chart out here. So here's your 5-minute chart. Price is now taking on its daily market profile. Its old low, that was the bottom of its daily at the 208.550. This is where shorts are going to be firing away out here. This is where longs are going to try to overtake it. They can overtake it. That becomes very bullish out here. Volume-wise, you're not seeing a whole lot. Again, 5-minute chart out here. Last time we had any volume was at 5 minutes past 1, and there were 24,000 contracts out there. Again, put the 120-minute time frame chart out here. You're going to see that descending price channel. You're going to see everything converging right about here. Tomorrow morning, we wake up, and this channel line gets taken out. Expect price to move up to 2,099. We'll call it 2,100 out there as the next move inside the ES Mini. Otherwise, if it's bad news and China sells off and the market doesn't make it past this, expect a retracement. Those are the two. Now, of course, you can say, oh, anybody could have called that. I don't know that there was anybody yesterday that was saying the market had a 90% chance of making a bottom or bounce yesterday afternoon at 158. I was the only one that was on the air that could have done that. This is Steve Rhodes with TFNN. Have a great Tuesday, folks. Stay tuned. David White is up next, and I'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.